A lot of us like to gamble. Some will do it with little things, like betting on the outcome of a coin toss. Others like poker and try to make money off gambling. And the existing risk can be exciting because of the payoff. But the biggest risks some people take are financial. The stock market can be scary when you don't know what you're doing. A majority of people just want to make a quick buck without really thinking about the consequences of their actions. That majority loses money quickly and often. It takes a seasoned gambler and an experienced trader to play the market like a finely tuned guitar. But the market is a volatile experiment that depends heavily on the trial and error approach. Let's say you buy a share that has a margin of 1%. A lot of people will buy a 100 of that stock to try to have a higher profit margin. But that is where the problem lies. The value of that stock is only valid on the minimum, and the rush to make money defeats the purpose when you can make a small profit and survive. But if you end up investing a large amount of money to get a bigger payback, the margin goes down significantly. For example, Roy trades on the Forex market and can buy 1/10 of 1 ounce of gold with a margin of 2%. But Roy then decides to buy 1 ounce because he thinks the margin will go up to 20%, but it does not. The margin will stay at 2% until the value goes up. The margin has gone down, and Roy has then assumed much more risk just to try to capitalize on the momentum. When people invest, they set targets of what they would like to get out of this buy. Most times, the target is unrealistic and actually hurts their chances to be profitable. Let's say that Tony wants to make $2,000 and invests $5,000 for the same. The margin for this would have to be as high as 40%, which is absolutely unrealistic and frankly, impossible. Let's say that Tony wants to have $1,000 a month. During his practice trading, he finds out that he can make 3 to 4% returns per month, and he realizes that his capital is too small to generate his target. He needs to have at least $33,333 to make his target a reality. To achieve a target, our goals need to be in line with reality. There are 2 outcomes when you trade: either you win or lose. But most people refuse to even acknowledge the possibility of a loss. This is why they don't prepare for it or use the tools at their disposal. They live in denial of even a chance that they might incur loss. These are the tools that can help you: stop loss, take profit, pending orders, buy limit, buy stop, sell limit, sell stop, buy stop limit, and sell stop limit. Above are 3 tools on the market. However, in the real market, very few people use these tools. Here are our solutions. Use automated risk formula. People can use this tool as VPS, virtual provide system. Let's say it's 3 a.m. and the market crashes for some reason. This automated tool has a % of loss that has been set up by you. And if it reaches that %, it will automatically close all trades. If you have made an investment of $10,000 and you set up the automated risk at 20%, when it reached a loss of $2,000, it automatically closes down all trades. It not only saves your investment, but it also saves your profit as well. The tool works only if both profit and loss have percentages set up. Addiction is a complex dependence. When we get addicted, we forget things, and that is a dangerous thing in the trading market, because the entire field depends on information, and when we forget, we have much to lose. We all know those who have an addiction, like play video games. When they play, they get lost in the game. It's fairly easy to get addicted to trading. Your mind gets a rush from it. And the promise of financial freedom, the apparent possibility to leave your 9 to 5, is a temptation a lot of people cannot resist.